no?
Nope.
Let's
You
try
want me to
something.
you want me to take the screen and then pass it over to you?
Okay.
Let me try
Thank
that.
you, buddy.
Share, continue. Desktop one. Okay.
All right.
Now let's. Now you do a share
Okay.
screen from the bottom. Now let's see
Thank
if
you.
that works.
I'm going to go back to the old way of showing the, tried something different.
Okay.
So see how this works here. How about now? See the dollar?
Yes, we can see your chart now. Perfect.
Okay. Thank you, Stel. So some people are real good. They're high tech. Some people are low tech, and I'm no tech. So someone still someone wanted me to fill out something on Excel. I said I don't have Excel. Anyway, I try to Excel, but I don't have it. So Warriors, I'm waiting for this blue line. I've been waiting for it for a while. Let's see where it comes in. And you know what else happened? I don't know if anyone else had. My moving averages are missing on my charts, and there was something like it was recovered, or there's a Dale recovered and another Dale. Anyway, um, I could talk without moving averages, so I have no divergences here. Okay, on any time frame, even though it's approaching a price level that I'm going to give it a shot, and the way I'm going to approach it. In the dollar is just risk the lows of the move here. So this line's coming in right around 50, 45. So there could be another day. What makes me think there could be another day is I really don't think cable's going to stop right here. Okay. It still did not make a new high for the move. Probably got some buy stops here. I think it needs to finish the job. The high here so far is 30.71, and the high here is 30.82. So I don't think cable's done. Even my fibs are missing, but I was looking for 61.8, 31.70 or so. So, we're not quite there. It's up here, 31.50. This is a little surprising. On the euro pound, it sure looked like we had a breakout yesterday. So forget this breakout. I still like it, and I just need to see where it ends up. My original plan was, even though I did it last week, was to wait for cable to get to my sell zone up 31.60 to 32-ish, and then look and see where euro pound is and just go for it. So that's happening. The metals are acting okay. I think we're approaching that 1920 support that Blake has put out on its bias chart. I'm thinking we could go 1945, 1960 as a possibility if we have a quality of this move from here. So it's looking pretty good. Silver's outperforming again. Actually, here's where I'm looking to sell the silver. My moving averages are gone, but up around the 26 level, I'd be looking for a short on silver. So everything's really hinges or is predicated upon a dollar turn back to the upside. And, I guess I wouldn't get, just putting a piece on instead of trying to be perfect. And then adding one more at 40 or 50 and then risk the lows of 170 is not that high of a risk, especially if it turns from this level, breaks a long-term trend line, or we have something like this from say 2.5 would take you up to 5.5 to 6. So we're not quite there yet. Could be there this session. But I'm looking to buy it, and it's pretty close. I'm just not ready to do it yet because on this 15-minute charts, it's going to have a chance to make one divergence. I mean, you have one here, right? But what's wrong with this divergence, guys? What do I normally look for? I don't know where the chat went. I normally look for above 30. Okay, so even this last divergence is 23. So one more new low, I'll have some divergence, maybe a second non-confirmation on the dollar. It's real short term. So, but I need at least one TF, one time frame to have divergence to go ahead and do it. And the 15 is going to be the first to give it. Looking at the S&Ps, I thought we had a chance yesterday to rally. I don't know what's going on with stimulus talks. It still looks corrective to me. And I think the bulls, the bears line in the sand is 34.80. I think I even adjusted this line. It's going to come in there right around the same level. So this 480, 35 level is going to be important in the S&P's confluence of that. And I think that's, about all. Oh, the end's getting killed. I didn't, I missed it. Because I'm still looking for higher yields, which, we're getting. I'm not sure what it's a pretty big move in the end. Something must have been some news to move it because it's not big risk off or anything. So I'm sure I'll find out. But, keep your bearishness in tow a little bit because when you look at this chart, it looks just absolutely ugly. But if you go out to the 4, what we're approaching is 61.8 here, right? Off this move. So I'm still looking for higher yields, which, the dollar's making new lows, but the yen is at 61.8. Which one is stronger, right? I mean, Canada succumbed to dollar weakness in a fairly big way from 2.5. It made new lows. Actually, Canada has some divergence down here on the 4-hour. And let's see, 2. Yeah. And before I turn it over to Blake, Stel, do you know how I would be able to get my moving averages back up on this setup?
You should be able to click the plus button. There's a circle with a plus button at the top. Left, left,
This
left,
one?
left, left, left. There. No, left there.
Oh,
sorry, not
mirror
add symbol. Sorry, that's to add symbol.
Yeah,
Hold on.
I was looking all day. I don't know
Somebody's going to help us. I don't remember, but
Okay. All right. It's okay. I'll get to it. I'll get to it later. I'll bring
Wait. You want to add a
two
moving
moving
average.
you have to go to, where's the add indicator?
Hit
well, I guess
FX.
it's
the FX button. Yeah, there you go.
Yeah,
Where's
you have
that?
to add that because what happened is you probably clicked on it,
this.
right clicked and removed it. Yeah, right
Okay.
there. Click that and then put in moving average, which is over to the right. Click that. And now X that window out. There. Now go right click on the moving average, hit settings, or should be
At the bottom, settings.
Yeah.
And then you select
there
what
you go.
kind
And
of
then
moving
you adjust
average.
your length to whatever period you want.
Oh,
200.
thanks. Yeah, I never would have done this on my own. Okay, so there's 50.
And then you just have to do that again for whatever moving averages you want.
Okay, where was that again? Click what at the
FX.
bottom?
FX
Oh,
at the
I
bottom,
repeat
yes.
the whole pattern, the whole deal again. Okay, FX and moving average, then exit out. And where do I go now?
Just right click on whichever one you want to change. So obviously you want to change the one that's near all the candles because it's probably,
Oh, yeah.
no, yeah, that one. And then,
Okay, settings. Oh.
You hit the settings of the candles. Yeah. You're hitting the settings of the candles.
Move away from the candles and go just to the line itself. So go, where's your cursor? Go up.
Yeah, I don't want this one.
Further up on that line, further up. No, further in the middle of where you were before. No, go right and down a little bit. You see where there's a diagonal line, the moving average makes a diagonal. Just go up.
Oh yeah,
there.
we're right there.
Oh my God.
Move away from the candles. Move away from the candles. So go on the line away from the candle, not that line, the other one. There you go. There, right click there. Right click there, settings. That's the settings of that moving average.
Hey guys, good news is if we can get Dale to do this, anybody can do this.
Anyway, thank you guys.
No worries, bro.
There you go.
All right.
Woo!
Yeah, thank you. All right. Sorry about wasting, first of all, the attendees' time with this and your time, guys. So I appreciate it. Thank you for having.
Sansi says, now change the colors.
No, I'm not doing anything else for a few months now. I have to recover. All right. Thank you, Blake. And
sure.
Thank you for your patience with me. So, waiting for you, Blake, to do the bias.
You wait for me? Okay.
Yeah.
All right. Let me go ahead and take over. Yes.
But boy, it's great. And I will work on changing the colors later. All right.
Yeah. So, I mean.
All right.
Yeah.
Anyway.
Yeah. I'm going to say, when you're looking at charts and you're looking at, you have tools. For me, it's really important that I'm, I don't get really complicated with my charts. Thank God. I'm sure you're probably like me, Dale. You only look at a few things and, you keep them on your screen all the time.
Yeah.
For me, I just like to be pretty efficient because with what I'm looking at, because what happens especially with TradingView charts, it happens a lot where I'll remove the moving averages. So like if I'm sitting here, looking at this chart and I go, oh, look at this fib level, and I right click on the fib to remove it.
Yeah.
Sometimes I end up, deleting. If I hit my delete button, I'll delete the moving average instead of my, I was thinking I was moving a fib.
That's
removing
what I
a
did,
fib, and then I remove a moving average, and it's like, oh crap, I got to put it back on again.
Yeah.
You do that, and it's like you end up being pretty efficient doing it.
Okay.
So anyway, yeah.
So what lit up cable today?
Some comments from Barnier. I guess a bunch of here. Let me go. Here's some of the comments from. This is our chat room earlier. So Barnier said the EU Council underscored our friends and partners from the UK that the EU wants a deal. We want a deal that will be mutually beneficial. We'll seek out necessary compromises. And then Mark says, I think it was comments about respecting British sovereignty that did that. And then, although there was some tampering down with the fishing, but we were chatting about it this morning in the chat rooms, and that's what got the cable moving. And the problem with these headlines, and this is like my chart of the day yesterday was the euro sterling, in case you missed it. And I was looking at this as a breakout. Thank goodness I didn't put a bid in at 31 last night, because I thought about it. Here it is. Because we broke out overnight, and I'm like, okay, well, here we go. Maybe we're going to start to see some negative headlines regarding Brexit. So I was going to actually put in a bid right here at 91 overnight, down at this level. And, I was cooking dinner and, hanging out with the family. And then, next thing you know, I forgot about it. Got up this morning. I'm like, thank God I didn't put that in. But what the sterling's doing now is just, it looks like it's testing, this trend line right here. But really that's it, Dale. And I think a lot of this is just headline driven, and you have to be a little careful with that. Right.
Yep.
with the headlines. I mean, and speaking of headlines, yesterday, I mean, and I got to tell you my thoughts here. You know, we're sitting around waiting for the, you know, U.S. Pelosi Mnuchin talks, finally wrap up some sort of trade deal or trade deal, excuse me, stimulus deal. And we're waiting around all day yesterday, waiting for these for these headlines. And we know they're negotiating. And you know, for the life of me, and I'm talking with the guys in my office, we can't figure out why she isn't taking the deal. You know, we're like, okay, you're at the table, you've got basically the money you want. You know, you have Senate support right now. There's no guarantee if you push it off into, you know, after the election, you're going to get your Senate support then. So you might not be even able to push a stimulus bill this big right now through, and it's already risky as it is, because you know you might not have all the votes, because there's a lot of Republicans that still oppose it, even though Trump said he could, you know, pull his weight and, you know, get everybody to jump on board. You know, the fact that she hasn't taken the deal, Pelosi, I mean, you know, I know there's a lot to it. There's, you know, there's states, and then there's funding, and the verbiage needs to be right. I get all that. But the point I'm trying to make is, if she doesn't take it now, we may not be able to get a stimulus deal done before or
February.
even after. Yeah, I mean, you know, we then run the risk that it really won't get done. And hold on really quick.
There are certain states that are already starting eviction processes right now for some people.
Yeah, you know, but I don't think it's going to get any better. You know, but the point I'm trying to make here is, I sat here yesterday and I tried to figure out, like, what the hell? Why isn't she just pulling the trigger and pushing this through and getting everything written up? I mean, because we're running out of time. I mean, you know, we're not going to be able to get this done. And I know she says everything is retroactive. And then I thought about what she said, retroactive. And I'm like, you know what? She's 80 years old, Pelosi, right?
Yeah.
She's 80. Do you think she really cares about her career all that much? Maybe her legacy, but I'm starting to think, man, this is personal. You know what I mean?
It could be.
I mean, it sucks. It's at the mercy of, you know, the Americans that are suffering, but I don't know, you know, you call her Crazy Nancy enough, or, you know, you badmouth her enough. They apparently haven't talked in person for a year, Trump and Pelosi. So I got to imagine she just has this disdain for him. And, you know, I've got to imagine this is like almost borderline personal right now. That's what I think. And so I don't know if a deal is going to get done. That's the point I'm trying to make, is I don't know if a deal is going to get done, Dale.
Yeah. Well, I mean, it's also the way whatever amount they came with, where it goes is in contention. Like, for example, the White House doesn't want to spend any money on testing and tracing.
Yeah.
And helping the states. I mean, they like PPE and stuff, you know, but
there's got to be a point of, you know, and they're always going to say it's, you know, it's because of the people. And we, you know, it's, you know, we don't, you know, we didn't want to do this because we didn't want to compromise this for that. And then, but in all honestly, I think when it really boils down to it, she's probably just, you know, like, you know,
yeah, because they could do something and then do something else after in February.
Well, but the thing is, I don't know if they're going to be able to get support from the House and the Senate after, you know, depending on
how it turns out,
where the chips fall. I mean, you know, so I don't know.
I don't know.
All I know is, oh, here it is. Meadows says biggest sticking point on COVID-19 aid deal is state and local funding.
Okay, see,
you know, and so again, we're just like sitting here going, dude, is it even going to happen? And like I said, I don't know. And I really don't know, but we're all waiting on it. It's not like, you know, you're the only one or we're the only one. We're all waiting for the same thing. We're all trying to get through this and hope they, just wrap this up, for crying out
Yeah,
loud.
I wish it was November, I don't know, 30th and everything was settled
Yeah.
already,
So let's yeah, exactly. I wish it was like actually December 15th right now.
Yeah.
Put me right in front of Christmas. I'm ready.
Yeah.
Okay, so sorry, just getting a drink of my coffee. So overnight, for those of you that don't know, I'm long euros. I bought euros yesterday around the 118 level. I've been long. I have a pretty sizable position. I had an order to take profit on half of my position overnight. Guess what price?
At the high.
118.72.
Yeah.
The high is 118.70. So
Yeah.
it missed my order, which really sucks because it missed my order because I had it at the 127% extension. As you can see, we got stopped just in front of it, which sucks because I told everybody this morning when I got up and we were down here in the low or in the high 40s. I'm like, this is the place I want to be adding. But because I've got a full size position right now, I can't just start, doubling up my position sizes. I just, this is not the kind of market to be doing that. It's not, these are the types of markets where you have to be actually more careful than, loosey goosey. So, anyway, it kind of bums me out because I was within two pips of getting my order triggered. Actually, my order was at 118.73. Sorry, I was within 2.5 pips of my order. So anyway, regardless, that's going to be resistance today. But I'm not going to write down that resistance. What I'm going to write down is actually this confluence. This is 161% extension and 78% retracement comes in at 119.25. Roughly 119.20, I guess, is what we could really write down. And I think that's going to be the resistance. Again, we're bullish. This is the only pair that we had on the board yesterday as being bullish.
Yeah, good call, Blake.
Thank you. I think dips now down to 118 are going to be very well supported. So if we can find a dip down to 118,
yeah,
you want to be a buyer. Now, I was just reading this piece from Deutsche Bank about the European issuance, and we talked about this yesterday. See, the thing about the euro is, and you guys have heard my argument for months, is that the debt that is being issued by the Eurozone investors are taking up, and that's exactly what's happened with this take up that we've seen the last couple of days. Will it tail off towards the end of the day today from natural demand? Yes, I believe so, but that doesn't mean that we won't continue to see, while the cable's at new highs, we won't continue to see buyers in the euro on dips. And that's what I think that we're going to be seeing as we make our way higher, is dips are going to be bought. So let's go into the pound. The pound's right up against resistance here. The 50% is at 130.90. Above that is 131.86, which is a 618. This is all, horizontal resistance as well. So 131.80 is next. So I'm going to write down 131 today. And then just in case the cable decides it wants to go 131.80. Is that what I had? Yeah, 131.80. We're going to try to take out some resistance here. Support.
Yeah, they're going for the stops now.
Yeah, supports 130. Okay. And am I brave enough to write down bullish? I'm not. I'm going to be quite frank with you. I'm not brave enough to put bullish, give this a bullish designation, because we're headline driven. So, you know what I mean?
Yeah.
Yeah, I mean, okay. So yesterday, the Aussie, wow, we respected the support like it was nobody's business. And that's key. I mean, this is all very important support. You know, remember 70.30 was the breakout point. And I know we've dipped below 70.30 before to 70 cents, but 70.30 is it. I mean, super important, right? And you can't be bearish right now, not with the support holding. That's not saying that we're going to necessarily rally, but or you should be outright bullish. But I think you have to be really nervous about being bearish. You can see all this previous support, resistance that comes in at 71.10. Just going to be doing this really quick because I think this is going to be a lot of the same stuff that we had yesterday. Look, head and shoulder pattern still developing. We have 60-60 and then 60-80. So actually 60-50 and 60-80. And support, I mean, all the way back down here at the 78% retracement, which is 65.50. So you're probably thinking, well, you know, since we're really close to the 66.50 levels, that, you know, time to get bullish. I would say it's probably time to look for shorts, you know, to be honest. You know, I mean, look, we've been range bound basically since a month, you know, so unless there's a deal, if there's a deal, you buy the Kiwi. Yeah. You buy the Aussie, right? But until there's a deal, dollar Canadian. Now this one's at risk. Dollar Canadian's trading pretty heavy. It is. And we're already probing these lows. Now that gave us a false breakdown with, notice the divergent relative strength here. Oops, that's not that one. There we go. Right?
Mm-hmm.
That means something. What that means is this is very important support now. Oops. Okay, and then resistance 31.50.
Yeah, we have Canadian data in 10 seconds. Sorry.
Okay, so we have, what do we got?
It's Canada CPI. And
notice,
retail sales.
I really don't, you notice I don't care about data because no one cares about data.
True. And retail sales slightly worse than expected. CPI.
Unless it's employment data or unless it's interest rate decisions, I really don't care about data.
Forget about data. Yeah.
With the overshadowing of the elections, and I mean, you have to have a really outsized number, like a really, really outsized number in order to move the market now. I mean, and that doesn't mean it can't happen. I remember it was like back in 2004, 2003, right? And we're kind of in the same situation where the market really just didn't care about anything but employment data, or, you know, it was employment data or interest rate decisions. Nothing else really mattered at that time. And I forget the reason why. I think because stocks were just going higher and everybody's like, well, equities are going higher. So it's just, it's just buy everything, everything's good. It was that type of situation, kind of like what we're in now, except, obviously we got, um, the elections and Brexit overhanging us right now. But I was sitting there, like, not even paying attention to the data, and Philly Fed came in. I want to say it was like 17 points worse than expectations. It was ridiculous. It was a huge miss, and the market just, whatever it was like, I can't remember if it was the euro or the Canadian. One of those two moved like 200 pips intraday. So, like, right after the data, like within 10 minutes of the data, it was such a big, crazy move. And so I try not to ignore data. The point I'm trying to make is here, I try not to ignore data, just knowing that it's around, just to take a quick glance to make sure it's not too big of a miss or anything. But like I said, right now, people just are not focused on economic data. But that's my experience of not paying attention and then it really mattering at one point when it catches you completely off guard.
Yep.
Okay. Let's go into, I can't remember. It was like 2003 or 2005 or something like that. Anyway, I'm going to finish this up. Here's Dollar Mex. This one's scary. I think I mentioned it to you guys yesterday. It's trading really heavy here. And I think if we break below 21, hold on really quick. I had open orders yesterday to sell Dollar Mex yesterday, and I didn't. I removed them overnight. I was going to sell some below 21 if there was a deal. And hold on, guys, really quick. All right, let's see here. Okay. So anyway, here's the Dollar Mex, and if you guys are in the Forex Analytics chat room, you guys know what I just did. So support's going to come in at 20.85. That's going to be important. Let's see. And, we're borderline about ready to flip to bearish here. Really, really close. Resistance right now is 21. Let's just write 21.25 and then 21.50. Okay. Dollar Swiss. We just broke through that 90.50 support, and now we're going to have this 90 level coming into play, which is huge. Hey, Steve's not going to be here today, right, Stel?
I'm here.
He's here.
Oh, you're here? Okay, I wasn't sure if you're going to make it or not. How's it going, Steve?
Good, mate.
Don't answer that question.
He doesn't complain much.
No, we were talking separately. It's nothing.
Only one time I heard Steve stressing out. It was like about a month ago, and he said, "I'm dying," which was a little bit of an exaggeration, right, bro? Oh, he's not answering. Okay.
Yeah, it's
Sorry, I missed the last part. What happened?
Oh, when you had to get everything ready for the summit and everything, and you Skyped, "I'm dying here." It's the only time I ever heard you complain.
Actually, I thought he was going to die. He was getting close to kicking the bucket there. Yeah. So it's going to be some support down here. We got to watch this on the US dollar Norwegian krona. I'm sorry, I'm just trying to get all this done. at 912, because if we break below, actually, it's like 911. Okay, and then you can see the 940 is so important. But notice how we're breaking this upward sloping trend line, which I'm gonna say is come on, why is my delete button not working? Delete. That stinks. Why can't I delete that? I can't even right click on it. Okay. There we go. That didn't do anything. What the heck? I'm having some issues right now. Anyway, it's running really slow. Okay. Anyway, the point I'm trying to make here is that you can see us sliding through this trend line support. Resistance still is going to be 940. Now, one thing I do want to talk to you guys about is this dollar yen. This move was surprising today, and it's still surprising. I'm looking at it going, what the hell happened here?
What was behind it? Do you know?
I don't know, because yields are up right now.
Yeah,
and there's risk on. So it's got to be some sort of corporate flow that we don't know about. And I haven't caught up with my office yet this morning that has a clue. But man, this breakthrough.
That was a shocker. Yeah.
What's that?
It was like a shocker when I turned on my platform and saw that.
Yeah, I know. Me too. I cannot figure out why the dollar yen just got destroyed overnight. I really don't know. Like I said, yields were screaming last night too. If you look at what, one of the better correlations have been in the markets has been, oh wow, look at the Aussie is just screaming right now. Holy cow, guys. What is going on? Did we get a deal?
Surrounding with the metals.
Yeah, I mean,
because the pound finally took out the stops up there. So we have another 80 points to the upside in the pound.
Is there a deal that's going on? Am I missing something?
Why? Because the S&Ps are up now?
Well, the S&Ps are up. Hold on.
I don't see any headlines, but maybe.
I'm looking for some headlines here.
Be back in a minute, guys.
Huh?
I'll be back in a minute.
Sure.
Okay.
Sure.
Yeah, I'm just gold's moving.
Metals,
Gold broke out last night.
Yeah, that was a good call of that triangle on. That was really nice.
Yeah, I mean it challenged some stops above it, and it looks firm enough to where it looks like it's going to break out. Everything's leaning that towards hey, there's a deal getting done, so you're seeing all these moves. And I mean, silver had already broken out last night. Gold,
Bitcoin's on the verge of breaking out.
Yeah, I mean, and the dollar, maybe this might be the catalyst that drove, the dollar yen lower. Anyway, I mean, look at the dollar yen just getting creamed. Let me just go write down some supports here, and then I'll let Steve and Stelios take over. 104.45 resistance now is 105. So. Dollar index is at risk of breaking. So we broke through the 92.70 support. So yeah, I mean, the next level is going to be the 78%, which comes in at 92.40. 92.40 resistance is 93. Right here. Right. So you got to be able to use this as an opportunity. Right. Just heads up there. What else do I want to do? Hold on really quick. I need to make an adjustment. 66, 64, 74. Okay. Man, this Aussie is just screaming right now. It's just squeezing the socks off of people. No, it was a big hold yesterday. Okay, where am I at? Sorry. Gold, next stop for gold, I think, is going to be 1980, I believe. Let me double check that. Well, that would be if we made it all the way up here. So 618, 78% retracement is going to be 1947, 1950. I think that's logical, given what's happening right now. So 1947. This is now flipped to bullish. Support is still, well, now it's any dip back down to 19. Okay. And S&Ps. I'm going to have to give you the same that we were at yesterday. So support being really critical at 34.20. But resistance today will be at 34.80 right here, guys. That's where we turn intraday bullish. Right there. 34.80. Let's see. $34.20 has to hold as support. Okay, there you go. Bias chart done. So Steve Stelios, good morning, guys.
Good morning, sir.
mate.
Hey. Sorry, I didn't mean to bleed into your time once again.
It's okay.
I'll let you guys take over here. But before I go, I want to say that, we're all still waiting for something, some sort of deal, some sort of something that's going to move the needle a little bit. But while we're waiting, this is the time that you don't want to be a hero. You want to be careful. It's okay to be wrong. It's not okay to stay wrong. Okay. So if you're wrong and you get into a bad trade, get out of it quick. So it doesn't become that bad trade becomes a really bad trade. Come join us in the chat rooms, because that's where you're going to find me and the rest of the team and be able to chat with us all day. To be part of Forex Analytics, it's only $1. Try it out for 10 days. Then once you're in there, download the mobile app, go to the chat rooms, which you'll find right here next to the avatar. And then if you want to learn how to get Forex Analytics possibly for free, our webinar sponsor is Pepperstone Securities. They are also, a partner with us. So if you're outside of the US or Canada, make sure you use this link right here. It says open account. This will link your account to Forex Analytics, and you can possibly get Forex Analytics for free for a period of time. So guys, what's up?
What's up?
What's up?
Gold is up. That's
I still laugh at those commercials.
I do too.
Funniest things in the world. That's us living in the early 2000s,
90s.
right?
Was it 90s or 2000?
Huh?
Anyway, it doesn't matter. Was it in the
Or
90s?
maybe it was the 90s.
I don't remember.
Might have been the 90s. All right, I'm done. All right. So,
Thanks, Blake.
Steve, how you doing today?
Well, good. How have you been?
Oh, fantastic.
Great.
I get up every morning and I'm like, what am I doing getting up at 3 o'clock in the morning? I say that to myself every day, but I still do it. Yeah. Anyway,
I do the same. I wake up every day and
I hit
wonder
the
how
snooze. I hit the snooze today and got up at 4:15.
Oh, good.
Blake, can you show
I
the advice
slept
chart
in.
one more time, please?
All right, there
Thank
you
you.
go.
I is sure.
Thank
I'm
you
sorry,
very
Work
much.
Steve.
of
What were you
art.
saying?
I wake up every day and ask myself, how does Blake wake up every day in 3 o'clock in the morning?
All right. Well, guys, I'm gonna
great
leave,
difficulty.
I'm gonna leave
For
you guys
sure.
there. And I know that that there's just we're kind of waiting for everything to happen, and I'm hoping something exciting happens soon because,
Nice Euro trade, Blake. So
Thanks.
you know what? I'm going to expose the secret. You've been mentoring me without knowing it for 3.5 years. I can't tell, everyone how much I've learned from you, watching you in the morning, and Stell and Steve and the whole team. And, I really believe Blake's, talking about how you could join. Surround yourself with better traders and you'll get better. And I can attest to that. Okay. It's not just a theory. So just,
Thank
being
you.
around these guys is going to help you. And the more exposure you could get, like being in the chat room instead of just 20 minutes with Blake a day and Steve and the rest of the crew, it's really going to, if you're interested in having a good career, it's a great investment.
Yep.
Well, thank you very much, Dale.
Thank
and
you
I
very
hope-
much,
All
Dale,
right.
for the kind
Yeah,
words.
I
It's
hope
true.
you guys can, be with us not only just in the face webinar, but in the chat rooms as well. And all right, guys, I'm gonna leave it with that. So thanks
All right.
everybody. Have a great day. Happy
You
Wednesday.
too, Blake.
Thank
All
you,
right, buddy.
Blake. We all learn from each other. That's for sure.
Yeah.
So we seem to be getting some kind of progress from the UK and the EU. Blake mentioned it, and excuse me, Barnier admitted that the EU must find a compromise after the ultimatum that Boris Johnson has basically put forward. And this is the first time in a while that I can remember, actually, that the Europeans seem to be taking a little bit of a step back. And there are friends of ours on the chat room and on Twitter that I speak with, and a lot of the Brits say, look, this is the only way you can deal with these people, meaning the Europeans. And, you have to be firm. You have to show that you mean business. Obviously, it could be a bluff. It could be, it could backfire on you, but maybe this is the only way an agreement can be made. I maintain that there will be some kind of agreement. Will it be a good one, a crappy one? I don't care. As long as a bit of the uncertainty goes away, and as long as the no deal Brexit scenario gets off the table, then we can agree. I think all of us can
Yeah,
agree
it should
that
be.
Sterling's going to be flying. The question is how far and how fast. That I don't know, but I do think that Europound, and I don't think I'm going to be getting my opportunity to sell, unfortunately, above 92. I think Europound is going to head towards 85 pretty quickly. So that's what we got from the UK and the EU. So some show some signs of progress. On the other side, in the US, both sides say they want to find an agreement. They are very close in what they're asking in terms of numbers, but obviously the way it's going to be spent and divided, that's, I think, this is the main sticking point. And I have to echo what Blake is saying about Pelosi and what's the rationale behind this digging her heels and really not budging an inch. I don't know. I really don't know. But I think in the end, that too will be done. Will it be before the elections or after the elections? At the end of the day, it doesn't matter. It doesn't really matter that much because
it matters to some individuals, but
yes.
the big picture having to do with markets and the economy in general, yes, it won't make any difference if it's 2 months later or
will
2
you
months
get
earlier.
$2 trillion in November or December or January or February? It's really it's not exactly the same thing, but you know what I mean. It's the same thing. So I think we can all agree that they will be getting it. The question is how and when. So unfortunately, we have to wait for that as well. So a lot of waiting happening now, but we're getting close to November and year end. So I think we're going to be getting a little bit of action soon. Data-wise, we had UK CPI came in at 0.5% year on year as expected, up from 0.2. And this is in line with CPI globally kind of inching up. And also worth noting, PPI input, which usually leads inflation, was up a lot compared to the estimate. The estimate was negative 0.4% month on month, and it came in at plus 1.1%. Remember,
that tells me, Stelio, that we probably need to readjust the way we calculate PPI. Yes,
yeah, true.
And the problem will be immediately fixed.
Yeah, I like your sarcasm. And this is in line with US PPI. Remember, a few days ago that was strong as well. So things rebounding a little bit in terms of numbers. And let's see how it goes from here. Otherwise, very little to say. the bond markets is something I'm looking at. If for people who have been following, I've been short the Bund for a while. Actually, at current levels, it's been doing nothing. I'm short treasuries as well via TBT. You know, Dale knows it, the 2 times leverage ETF. I like that. I shorted that when the 10-year yield was around 71 or 72, and I think you know, we've said this so many times. I think the bond market is the biggest bubble over them all. But unfortunately, you have every major central bank buying everything in terms of issuance, and you know, they're just buying everything. So they're going to keep yields low, but for how long? You know,
It's actually the bubble that keeps all the other bubbles going, Stelio.
going. Yes,
Because that's what it is.
True. So that's it from me. We have a few minutes. We have a few questions. A lot of people asking about natural gas because it broke $3, didn't it? So that's definitely something to.
You know, they need to admit that we saw that coming. You know, I said that next time we test to 90 won't hold, and that seems to be the case here. We already have an almost 5% move higher today, and I think that might be the beginning of something bigger and not like the end. We're breaking through the RSI trendline resistance at the same time that we're breaking this key horizontal resistance area. We even have a little cup and handle formation here. We showed that several days ago on a 4-hour chart. Here it is on the daily. So in all essence, I really see no reason why we would stop here. Just the cup and handle formations measured target roughly should take us to $3.50. And above that, we have the 161.8% extension, which comes at 373. Anyhow, I think there is more to come from natural gas, and I'm talking about upside, of course. So yeah, we have a legitimate breakout as far as I can tell. And yeah, I don't think there is much more to be said here. Being short at the moment, natural gas, in my opinion, is an extremely dangerous proposition. So I assume, you know, if you're not long, at least you're not short. Having said that, once again, crude oil is doing nothing. So I'm not really sure what's up with this market. It's in hypnosis at the moment. I'm assuming that can't remain, you know, the case for a long period of time. But for the time being, it is what it is, and you know, you have to trade it for what it is, or not trade it for what it is, if we want to be exact. Now, having to do with gold, Blake mentioned that gold is breaking out. Yes, that is indeed the case. Now, you know me, I'd rather you know, see a daily close above this trend line resistance, because yesterday we did not close above this trend line. So you know, until yesterday's close, we did not have a breakout here. We are attempting to break out today. So let's see how that's going to work. Silver, you know, as I've said, silver definitely doesn't look that good at the moment. So you know, if you personally, if I wanted to trade a breakout at the moment, I mean, if I wanted, you know, to have a technical trade as we speak, that would have to be gold if we close above this trend line resistance today. Platinum also moving higher, but within the context of this channel. Palladium also, like you know, pushing higher. I'm assuming a break out from 2,500 in palladium can actually accelerate the upside. So I'm watching that level. I think it's going to be important. I think it can actually lead to an acceleration of the trend higher. So keep that in mind. Now, Blake already mentioned earlier, I'm assuming, you know, the reaction in the Aussie. Just wanted to remind you that yesterday we were focusing mostly on the Kiwi, also on the Aussie yen and the Kiwi yen. Why? Because all three of them were actually testing important trendline supports, and so far they seem to be holding. Here is the Kiwi that held this channel trendline support and is you know, rebounding today. Here is the Aussie yen, which is still holding this trend line support. And here's the Kiwi yen, same deal. Now, the fact that Aussie yen and Kiwi yen have barely moved is obviously due to the fact that, yes, the Aussie and the Kiwi have moved significantly higher, but at the same time, we had the USD yen plunging lower. Now, speaking about the USD yen, in my opinion, I don't know what Blake said because I wasn't here, but in my opinion, nothing has changed here. I still see a triangle within a bigger symmetrical triangle. Bottom line, there's nothing to do here. Now, admittedly, breaking down from like 104 might finally, bring this market to life. But, that's just an assumption. I've lost all faith in this market a long time ago. So, I have very low expectations. But in any case, 104 is a key support level. I'm not interested in doing something, unless this breaks down. Now to the upside, the equivalent level would be somewhere at 106.50. So no reason to consider it today. I mean, we're almost 200 pips away. I don't think that the pair can within the day reverse and rally more than 200 pips to, talk about that possibility. Since we're closer to support, that's why I'm mentioning that. It's not that I have a specific bearish thesis for the time being, but it's just that we're closer to support. That's why I'm focusing more on that. Now, Stelio, Dale, if you want to give me one of the earlier questions, because I came in at the bottom of the hour. So if there are any earlier questions to that, I could cover those before I move to the rest. Question about, I see some questions like euros, the DXY. Listen, about the DXY, I have nothing to add. I'm talking about the DXY on a daily basis, and you know my thesis. I've said multiple times. For me, the DXY is a sell. I said that even when we were back testing this confluence of resistances at 94. I think there is absolutely no technical or fundamental reason to be long the dollar at the moment. Now, having said that, 92.40 is some type of support, but really, as I said, I find no reason why you would want to be long the dollar. As simple as that. I see no chart that tells me that I want to be long the dollar. I mean, even if I completely erase my fundamental thesis, I don't see technically any reason to be long the dollar. Below 94, the dollar index is bearish, and the dollar in general. I mean, look at Euro USD. The Euro USD is breaking out, right? It closed above this trend line resistance yesterday. It's moving even higher today. USD Swiss has broken down from this corrective channel. The USD Swiss actually looks very similarly to the DXY, as you see. It's very nicely correlated. Next area of support roughly at 90 cents. Below that, I think we're gonna head all the way down to 87.40 cents, and we see what happens from there. The dollar is almost across the board really weak. You see the reaction today in the Aussie and the Kiwi. Now, USD CAD, somebody asked about it. USD CAD looks similarly as well. I mean, we had a reaction. It was perfectly channeled, A, B, C. I think we're headed to new lows. So where would that be? I'm assuming 127.50 is a nice next downside target. Some divergences here, some divergences in the USD NOK, admittedly. But having said that, as I said, the vast majority of the pairs tells me that the US dollar wants to keep moving lower. So, that's the case. Now, having to do with indices, there are people asking about the DAX. Now, I don't know how legitimate this breakdown is in the S&P. I'm going to start from that. I still don't see anything really strong in this move, and for sure this 3400 area is now support. So keep an eye on that. That's it. Yeah. Okay. Who do we have today, Dale?
Lance Lewis, money manager.
Okay.
Lance does a lot in gold, and looking forward to what he's scene ahead of the elections here. So,
Nice.
oh yeah, Foxy Lady intro. Yeah, that's it, DJ. All right. I only wish. You think I'd be trading if I could play like Hendrix? Come on, man. All right. Anyway, Lance, I'm going to get you all set up here.
Okay. See you tomorrow.
All right, buddy. Good job. And, you know, I mean it, Steve. I've learned a lot from you
Thank
over
you,
the
Dave.
years. So, all right, Lance, welcome back to Face.
Hey, how's it going?
Good, buddy. How are you? You remember how to share a screen here?
I'm doing it right now.
Good memory. All right. So, you know, we haven't talked in a while, and, it's, you know, a lot of things have happened. You want to start here with, what are we looking at here? GDX.
Let's see here. Yeah, that's what I had on there at first. Yeah, last time we talked, I believe it was in early August, and we basically had, you know, gold gone into a blow off at that time, or at least what I thought was a blow off, and then it terminated. And this has basically happened. You're up 9 weeks straight. This has happened 3 other times in history, this being the 4th. And of the prior 3, gold was lower 1 month, 3 months, and 6 months later. And so far, we are lower 1 month and looking to be lower 3 months later, and probably 6 months as well.
Okay. A lot of people are saying we have a breakout. You're going to view this as just another. I mean, the whole process here since the highs, Lance, looks corrective. Yeah, you know,
Yes.
you're blowing off, and then we've gone into this chop fest here in gold. I'm thinking like 1940 to 60 may be a decent sell point, but actually, my preferred short is going to be silver based upon what I see in the gold silver ratio. Do you follow that for preferred longs and shorts? The gold silver ratio when it's going down, your preferred long silver, and if it's going up, your preferred long is gold.
I mean, typically when you're in a rally in a precious metal, silver is going to outperform. That's true, and same to the downside when you're in a cyclical bear or a secular bear. But that's just kind of one component of what I look at. You know, I guess what strikes me more right now is that, you know, back up here, the net short position commercials, we are roughly equal to that now, even as gold is about $50 lower. So commercials are as short now as they were right up in here.
Okay.
And as you know, they're typically right.
They typically can take more heat than us too. They're deeper
exactly.
pockets.
And we also, you know, interestingly enough, just even this morning, you know, the dollar index, I mean, the gold and the dollar have been, get to the chart here. That's not the one I want.
You know, there was a big move up in the yen today. Do you know what was behind it? And
no, I don't.
You know,
I mean, we've been moving around on a lot of this stimulus stuff. You know, interestingly enough, Europe is down about 1%, even though the S&Ps are indicated a little higher. But I mean, this, you know, versus the dollar for the last, I'd say 2 months, basically, gold, the S&Ps, everything has been
binary,
all one trade. You know, versus the dollar. Even again this morning, this dollar index doesn't show this morning's activity, but you've broken below 93. You know, oddly enough, gold has not been able to surpass this peak right up here, even as the dollar index has broken down that, you know, below that prior low. So you got a slight divergence there. But should the S&Ps, you know, turn over after the open, let's call it on stimulus disappointment, because there is no deal once again. The dollar's probably going to rally. Gold's probably going to reverse. We go back into this game again.
So what do you do when the market's in a position like this? You have no commitment to gold-related assets, and you're just trying to be patient, like Tom Petty says, waiting is the hardest part.
Right. Well, you know, I think I instant messaged you back up in here. You know, I was short and I covered, and then I put it out again, you know, in GDX via dust. around in
Okay.
here, and I took it off again, and I'm
You're
sure
trading it.
Yeah, I'm just trading it because, like I said, I think odds are you're going to head lower into the election. And the one thing with everybody talks about QE being inflationary, unless you have a transmission mechanism, that being the government sending out checks, what have you, stimulus that the Fed is directly going to finance, all that money just stacks up at the banks as the Fed buys those bonds, because the banks aren't lending, so it's not getting out of the real economy. And if Biden does win the election, which looks probable, you're not going to have a stimulus package until probably February. And so you're going to be in this intervening period where you're going to see, probably deflationary forces, bankruptcies, all kinds of bad things between now and early next year. And, probably the Fed's going to be forced to come back in with QE either in November, additional QE, or December. And if gold's sold off enough and it's sold out, it can actually, it can go ahead and turn, and that could be the catalyst to potentially turn it. But my guess is you're going to be somewhere down in here before you eventually turn back to the other side.
So under 1800, right around that.
Right around it. I mean,
yeah.
you never know these things until after the fact, but that's just
true.
a guess at the moment. I mean, I think that seems, like I said, last time commercials were roughly the same. They're about as short now as they were back up here. You overlay this a similar decline, and it points at around 1800. And there's chart reasons to think you could bottom there also, but until you get there, you don't really know, to be honest.
Okay. What else is on your radar?
It's just here in the short term. The GDX-GLD ratio has broken its uptrend. The silver stocks versus silver, look even worse, since they basically peaked back in May, and they continue to underperform the metal, which usually is not a great sign either, and just kind of reinforces the fact that you're likely still you're still in a corrective phase. I know everybody's been a lot of people have been very bullish since then, since we peaked, but I think that's a little misplaced, a little early. And my model too is not anywhere. Well, I say that it's not anywhere close to a buy. If you were to have a severe breakdown and get a sell-off over several days in gold, like what I've described, it could potentially flash a buy that it hasn't done since March. But at the moment, it's not even close.
Okay, so that's an interesting look. I ascribe to that belief too, that the shares lead the underlying commodity. And I noticed when gold was going parabolic that the miners really were underperforming near the top, and they still seem to be, so there's a visual of what it felt like to me. So, okay. So we have time to buy the shares. I interviewed someone that likes that ETF on weakness, SILJ, which are the junior silver. Yeah, you follow those?
I do, not extremely closely, but
doesn't look
real. They're all
liquid.
going to move together.
What's that?
I said they're all going to move together.
Okay.
They're all going to continue to correct, right. or they're all going to turn. That one doesn't go up and the other ones continue to go down. I mean, there is reason to believe that the juniors would potentially outperform on a new leg up, given that you're well into this. Going on, since March? How many months is that?
Are you a long-term dollar bull, long-term dollar bear, Lance? Which are you? Because there are two camps.
I'm a long-term dollar bear, but at the moment, given that virtually I was listening to your prior guest that couldn't think of any possible reason for the dollar to go up, and I think that's kind of where everybody is at the moment. A lot of the sentiment data and certainly the commitments of traders data has the market very short the dollar, not as short as they were 3 weeks ago, but still very short. And
you mean the commercials in euro and cable, or the dollar?
I mean specs very short very short the dollar versus the euro.
Okay, large or small specs?
large.
Okay, so the funds are short the
The
dollar.
funds, yeah. So the funds that you've had very big bets against the dollar, and they haven't been working over the last couple months as the dollar put in its low back in September.
Right.
And this versus the index, and versus a lot of the major currencies as well.
Yeah, I'm looking for that low to hold above, like, I'm looking for a buy round. I put a piece on today. It's 92.65.
Mhm.
I'll try another piece around 35, and I'm wrong under the low. And then if we have equality from the last dollar pop, which was, I think, about 300 points, that would take us up to 95.5, 96 in the Dixie.
Mhm.
So
That's kind of what I mean. I think a bear market rally is to be expected here, and that fits with precious
the
metals.
gold,
Uh-huh.
and a correction in stocks maybe, and
Exactly. And
yeah. So the
corresponding-
dollar turns up, will create pressure in most instruments.
Correct. Yeah,
Maybe
and
not.
oddly enough, this is an hourly chart of the DXY. You've got a bullish divergence here on I've been watching this on the RSI, where you hit this low back here. The dollar index has plunged today, yet RSI is not confirming with new lows. So it'd be interesting. I said it'll be interesting to see even today what happens after the open. If the S&Ps do reverse, you're going to see this move up.
Yeah, I renamed RSI. Do you know what I renamed it to?
What'd you rename it to?
You're a great straight man. The Real Simple Implicator. You like that?
I like that.
Yeah. All right. Well, don't use it in Scrabble, because you won't find it in the dictionary. Implicator. Okay. I don't think it's a word. I don't know why it wouldn't be. To me, it's something that implies something, so yeah, that's an interesting look there on the dollar. You do anything with the stock indexes, or you're really precious metal focused on your fund, aren't you, Lance?
I really am. I don't really move too far outside of my sandbox. Gold's hard enough as it is, and
yeah. There's nothing, I bring up this example when I talk to people who are, trading a lot of different instruments, that I knew guys on the floor at the CME that never left one trading pit their whole career, and that they knew it like the back of their hand. And, I actually think being focused on, just one area makes you an expert instead of a jack of all trades. So nothing wrong with, finding what fits your personality. As Jack Schwager said, you have to find a trading style that fits your personality. I bet it wasn't always this way for you. I bet you used to be all over the board.
Years ago I was. I've become definitely more focused within the last 10 years in gold and gold equities.
You have any, there's a lot of banter around digital currencies. Even Paul said he's going to take a look at it, and central banks are taking a look at it. Do you think that's that's part of the war on cash, to have everything digitized, so you really know where every transaction, every
for tracking
deposit, do you think we're going that way eventually?
It does seem that way, doesn't it?
Yeah.
I think that's highly probable. And then I'm definitely a Bitcoin fan.
You are? Okay.
Yes.
Okay. Do you trade it, or you're one of those hodls?
With Bitcoin, I kind of treat it like a savings account. I just buy a little bit every now and then and just kind of put it away, and that's what I do with it.
Okay. Putting in a pretty good day today.
It is. Yes, it is.
Yeah. The news, what PayPal's going to be
accepting payment. Yes.
Yeah.
Another brick in the wall.
Okay. So you have a view on prices. You just, believe in the story of blockchain and Bitcoin.
I just think over time, it's likely to see as people move away from fiat currencies, it's going to be one bucket that they go to, and just part of the mistrust of fiat currencies that's been building for years with what central banks have been doing.
Let me ask you this, do you tell people to hold physical metal besides trading ETFs and shares and that way of approaching gold? What's your view on physical possession of precious metals?
I don't think it's necessary unless you think really bad things are going to happen politically in the nation where you reside. But if you
So
think
tell me why you're optimistic about the U.S.
The U.S. has lots of natural resources. The United States is a very wealthy country. I don't see that changing anytime soon. Certainly, we can make a lot of mistakes and depreciate the currency and cause all sorts of problems for the dollar, which is going to increase the value of gold. But I don't see the demise of the United States coming anytime soon.
Okay. Does COVID play in? We're wealthy but broke. Forex Gal just wrote.
Well,
so fiscally, we're broke.
Right. The beauty of that is as long as the rest of the world is stupid enough to continue to accept green pieces of paper for payment, that's a pretty good world to live in. And for right now, they're still accepting it, oddly enough.
Okay. I wonder what it'll be like, say, the Dixie goes to 50 during a huge bear market. And really, when you think about it, Lance, the area that you're in could be the right area because isn't the dollar the easiest thing to be a sacrificial lamb to get out of or at least ameliorate the debt that we're accumulating? Be kind of invisible. A lot of people haven't noticed it's already lost 90% of its value. So,
True.
Another 50% haircut from here will be noticed in grocery stores and everything we need to live on. But, for the most part, it would be like an invisible inflationary depression. That's kind of the way I think we're going to. Don't you think that the Fed is going to achieve their target and be careful what they wish for about trying to get inflation up to 2%?
I think eventually they will, but I think it's almost kind of an all or nothing. You can't get a little bit pregnant. I don't think they're going to be able to create just a little bit of inflation. Either you're going to continue to see deflation or a lot of inflation overnight. And
what's a catalyst for both of those scenarios?
The
dollar.
That's more than likely it's going to be a big component of it. And
Okay.
how all this plays out, we will have to see. But I go back to QE in and of itself is deflationary unless you get Congress sending out digital checks, ACHing into everybody's account. And I'm not talking just one round of checks like we had back in whatever month that was.
You're talking universal income.
It's got to be something really insane, and I'm sure they'll do it eventually. I mean, if push comes to shove, the back's against the wall, that's what will happen. But and I don't think it'll. I mean, I think this will happen in other places in the world too. So you may not see it just in the dollar because the dollars versus other pieces of paper. You may just see it in gold versus the other pieces of paper in Bitcoin and
Right.
commodities and other hard assets.
How's your fund doing year to date?
Up about 35%.
Okay, nice, good job. And is it only for accredited investors?
We actually, yes.
Okay. All right. And what are those? They've changed those qualifications. What is it? $1 million net worth outside of your house?
It's actually it's qualified is what it's called now. It's kind of a step above accredited. You've got to have a net worth of 2 million or $1 million with me, and that's excluding your residence. And there's a bunch of different qualifications.
Okay. Well, I'm going to start saving up, and I'll be with you in about 10 years.
Awesome.
All right. You want to show your website or anything, so that people know how to get a hold of you and reach you? There's probably a couple of viewers that might qualify for that. And do you put out anything that, say, a retail trader would want to follow? Like I know you follow commercial traders. So we have someone in here said that, he qualifies. What's the best way for people to get a hold of you, Lance?
Yeah, well, my website's here on the screen, dailymarketsummary.com, and it's available to anybody.
I'm
to
still
subscribe.
seeing your charts.
Oh, okay. Oh, you know why? That's because it didn't.
Yeah, new share.
New share. How do I do that?
You just click pause. No, you click new share.
Stop
Yeah,
share. Share screen. And
And when I was raising
see it
money
now?
yeah, got it. So when I was raising money for CTAs, the most important part for me was what was the worst drawdown. Okay, so that tells me how they handle things when things aren't going well. So what's been your worst drawdown since you've been managing this fund?
In 2013, I was down about 50% because I did not recognize the bear market that was underway in gold, and
Okay.
that was a really bad year. The good news was I was up about 30% the next year, and I was up 150% in 2015. So I turned it around rather quickly, but
Okay.
that was a big misstep.
What was your mistake? Risk management, being stubborn, adding to a losing position. Let's do a post-mortem on that.
Yeah. At the time, gold had been in a long-term bull market since 2000. I was long only, and to be real honest, I didn't see it coming. We had QE3 at the time, which you would have thought would have been inflationary. This is why experience has taught me a lot. People assume just because we've got QE that gold's got to go up and you've got to get inflation. Well, QE3 was done in 2013, and gold had one of its worst years ever. So that needs to be remembered. It's not that those two don't go hand in hand. But after 2013, I turned long short, and that's why performance has gotten so much better too.
Well, you know what? You're not really successful until you have to weather adversity and come back from adversity. And congratulations on that. And thanks for hanging out with us and giving us some views about still being patient, waiting for better entries in the metals and the shares, and hope that I won't use that, term that our president used, turn the corner. I just hope you have a great fall and winter trading season and bring home those results, or even exceed where you stand today, Lance. I wish you all the best. I root for you.
I appreciate it.
All right, buddy. So
All right.
Lance Lewis, everybody, anything you want to wrap it with, Lance? Anything you want to?
No, I think we've covered all the bases.
Okay, so there's Lance's market letter. How often do you publish it, update it?
That's every day after the
Every
close.
day. Okay. And that's free to anyone that wants to come and read it, huh?
Well, then you've got to subscribe to read the
Oh.
daily piece, and there's intraday. I post up intraday comments as well.
Okay.
And free trials available.
Okay. So www.dailymarketsummary.com. Free trial, 1 month, for $100. Okay.
The free trials for 5 days. It doesn't cost.
I see. Okay. Reasonable. Thank you for your time, Lance. Good luck. Good hunting, my trading warrior brother. And thank you for coming here today and sharing your insight, knowledge, wisdom with us. Appreciate it.
All right. Take it easy, Dale.
All right, Lance. Lance Lewis, everyone, that's a wrap. Remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. Good hunting the rest of the day. You're welcome, Laura, Coyote, Monica. See you guys.